Investors are showing again how disappointed they are with Facebook. The company's stock has been falling since its troubled initial public offering 2 months ago.
Now, on Thursday, Facebook released stronger than expected numbers, but even that didn't help, as Rebecca Jarvis shows us this morning. Sorry, Rebecca, let's try that again. Good morning to you.
It's good with me. I like it, Gail and Charlie. Good morning. Thursday was the first time we heard from CEO Mark Zuckerberg since the company went public in May, but even surprise comments from the hoodie-wearing boy wonder weren't enough to impress investors. Facebook shares are down 9% this morning in pre-market trading. The stock has now lost a third of its value since debuting at $38. And at issue here is how the company earns money. Advertising continues to be its main revenue stream, accounting for 84% of the company's sales. But to what degree those ads are actually paying off for advertisers is still unclear, and that can be an issue. Now, during the conference call, Zuckerberg stressed the importance of making his site easier to access on smartphones. He said mobile users are 20% more likely to use Facebook any given day. So while the company boasts a staggering 955 million active monthly users, the rate at which they're adding new users is slowing down. New users and where they live are the lifeline for the young company, and all users are not created equal. Every U.S. and Canadian with a Facebook account is worth $3.20 to the social network. In Europe, it's less than $1.50. In Asia, just 55 cents, and the rest of the world, where Facebook has the biggest growth potential, just 44 cents per user. Analysts say Facebook continues to be a highly speculative stock. Online discount brokerage Just a Trade says its clients hold the stock no longer than 5 days, and 40% buy and sell in the same day. Gail and Charlie.
Rebecca, is there some concern in the tech community because of what Zynga said and Zynga said, and this report from Facebook, that there might be declining confidence in the earnings potential of tech companies in general?
And this is a point, Charlie, that you raised with the Reddit CEO yesterday. Essentially, what you have here is an environment where, of course, these companies are still growing. Zynga, Facebook, Apple, Amazon, they are still adding users. There's still heavy interest in them. But the question is the interest enough to validate the high valuations on the stocks themselves? And can these companies continue to grow at a rate that merits the kind of price that you're paying to own their stocks, Gail?
Might it affect the anticipation of some other IPOs that may be down the road?
Well, and that raises another great point, because you have Zynga, Groupon, Facebook. These are all recent IPOs, and they have lost a great deal of money for shareholders who bought them at the outset. So there's obviously a lot of sense in the IPO community and on Wall Street that maybe it's harder to go public as one of these types of companies.
Thanks, Rebecca.
Thank you.